Hey everyone, welcome back to the channel, your number one source for income-oriented investing, and it's time for the high yield picks of the month and overview. So this is going to be the very first time where I am separating, and I will have two separate videos, two separate episodes. One where I will cover all the funds or ETFs, high yield funds, on the Canadian stock market. So this is going to be this video, and I'm going to have a completely separate video for the review of the American ones, or the ones that listed on the American stock market. So if you're American, you're watching this, you don't invest on the Canadian stock market, you do not need to watch this video. Look for the other episode, which is going to be released either the same day or within 48 hours of the Canadian one being released. So this is the first time I'm doing it. I'm separating it because there's so many new funds now that the video just got too extreme. So I'm going to make two separate videos. So we'll start this episode. I'm going to cover the Canadian stock market, or the funds listed on the Canadian stock market. So let's start with looking at what the market has done in the last month. The markets are pretty much on fire, especially the US ones. But if you look at the Canadian one, TSX Composite Index last month, and by the way, I'm filming this on March 1st, a little bit earlier than I normally film it, but I gotta film it now because I'm getting ready for a trip for Panama City, and I'll be away for 2 weeks. So I'm filming this on March 1st. Last 30 days here, last month, up 2%. So the stock markets has been on fire, especially the US one, guys. We're at all-time records. I mean, look at the S&P 500 in the last month, up 4.68%. But of course, the big story is technology. It's been ripping like crazy. And the NASDAQ 100 index, which is very technology heavy, is up 5.5% in the last month alone. Absolutely incredible. So now let's go through the high yield important funds on the Canadian market, and then I'll tell you which ones I feel are undervalued, which is always very hard during a bull market. But first, I'd like to thank the sponsor of the video. Once again, it's Harvest ETFs, very, very good friend of the channel. Of course, Harvest has HDIF, they're all-in-one leveraged covered call solution, which I love. HDIF, make sure to check this one out. Also, their HPYT ETF, guys. This is the highest yielding US government bond covered call ETF on the Canadian market, about 15.5% yield now. It's growing very, very quickly, very popular. Pretty good if you want some fixed income, but now we could actually have some yield off fixed income. And don't forget, they actually just launched HPYM, the intermediate one, or the 7 to 10 year one. So it's basically Happy T's younger brother or sister with less duration risk. And in case you haven't seen it, I did a recent video talking about HPYM in detail, and I actually interview and I talk about it with Paul McDonald, the Chief Investment Officer at Harvest ETF. So once again, I'd like to thank Harvest for sponsoring this video. So HDIF, let's start with this one here. No change, and of course, no change is always good news. HDIF and Harvest is the epitome of consistency. So no changes in terms of distribution. It's been the same since the beginning at a little over 7 cents a month. So right now you could pick some up and get a nice yield of about 10.5%. And HDIF, it is very heavy on more cyclical sectors. There's one ETF in here that's just Canada. There's the US banks. There's utilities, there's travel. These are sectors that haven't done too well compared to technology or the overall American stock market. So I think HDIF, if you're asking me which is going to be the most undervalued all-in-one, it's probably going to be HDIF just because of the sector composition. So moving on, we're going to look at HYLD and HDIV, of course. As you know, as already announced, they did a massive internalization, complete transformation of the fund, distribution increase of $0.01 per month for both HYLD and HDIV. And I'm happy to say that in the next week or so, once this video comes out, I already did it, but the video is going to come out where I do a Q&A with Hamilton ETFs where we talk about HYLD and HDIV in detail. You don't want to miss that video, especially if you own HYLD and HDIV. We're going to talk to them about the fee reduction, the composition, why they decided to go with the composition they decided to, et cetera, distributions. Can we expect more distribution increases? So I asked them a lot of questions, including some questions that I got from the audience, from you guys. So make sure you watch that video when it comes out. So in terms of HYLD and HDIV, we got a nice big distribution increase, which is pretty much due because of the changes they did, the internalization, which lowered the fees tremendously and also increased the yield. Next, all in one is BMAX, of course. BMAX is, I would say, is one of the more conservative or lower volatility ones, just because it's 70% stocks and 30% fixed income. It does use a little bit more leverage than the rest of them at 33%, but because it's more conservative, that kind of nullifies it. So the yield is about 9.5%. And BMAX also recently raised its distribution, by the way, from 10 cents to 10.417 a month. So obviously the distribution is well sustained. I also consider Brompton a more conservative manager. They're especially conservative with their covered calls. They don't do a lot of covered calls. Just from watching them and reading their material, they're not super aggressive with their covered call. They're covered calls. They're more, when they invest in the stocks, they believe in the growth of the stock. So, so BMAX, a very good one to consider if you like lower volatility. And just look at the stock chart if you don't believe me. Very low volatility. From Horizons, of course, some of my favorite ones as well here. You got USCL, which is pretty much the S&P 500. QQCL, NASDAQ 100, CNCL is the Canadian one, TSX 60, all of Canada basically. And then you have the super all-in-one EQCL, which is a combination of S&P 500, NASDAQ 100, Canada, a little bit of growth with the emerging markets and ETF and international developed, things like Europe and Australia. So no news on any of these. And of course, there's non-leveraged versions of all of these, USCC, QQCC, right, CNCC, and GRCC. Very easy to remember. So no distribution changes at all. They've all been doing fairly well, especially USCL and QQCL, because the US markets have been going up. They do quite a little bit more aggressive with the covered calls on these ones, guys, ever since they did the change in 2022. So they could go up to 50% coverage with the covered calls. And if you scroll down, and they're only one of the only managers who does this, which I love. If you scroll down and look at portfolio metrics, you could actually see the percentage written of covered calls, and you see it's 44.6 for USCL. 45%. It's almost 50% coverage. So let's look at the Canadian one, 46. Yeah. So you could look at those, but I would say, obviously there's going to be more covered calls and less upside, but more yield, right? When you're writing more covered calls, you're going to get more yield, guys, but you're going to capture less upside when the markets go up. So I would say, these ones are pretty, they're yield first, definitely. Now we're moving on to Canoe EIT, of course. I really wanted to focus on this one a little bit because I'm actually very surprised that it's trading at about a 3% discount right now. So it's worth $13.78, but you could pick some up for about $13.38. Let me just refresh the page here, make sure I have the right NAVs. Okay, here are the right ones. So $13.73, that's how much it's worth. You could pick some up for about $13.36. And remember, if you want to calculate what is the discount percentage, you just do the stock price, the market price, which is $13.36, divided by the net asset value of $13.78. Minus 1 times 100, guys. So you're getting a 3% discount, which is really, really good for a super consistent, long-lasting, amazing fund here. So just wanted to point that out. It's a good time to pick up EIT. By the way, if you hear some really strange noise, drilling, there's renovations going on in the building. I really apologize for that. Moving on to ZWQT. Again, there's nothing to report here. Distribution, I believe has stayed complete the same at 8.5 cents. Moving on to the Evolve one. So Evolve, you have ESPX and ETSX, which is literally the S&P 500. So this one you could pretty much compare it to USCC or USCL, but it doesn't have leverage. So I like to compare it to USCC, but it does less covered calls. It does only up to 33% covered calls, whereas USCC and USCL, like we saw, does it up to 50%, which means it's gonna have less yield, of course, right? I think USCC is about 10.5. So this one is at 8, but it's going to capture more upside when the S&P goes up, which it has been. So if you want to capture more upside and you're okay with 8% yield, ESPX, I would strongly consider it. It's doing really well. Same thing for ETSX, up to 33% of the portfolio. I would compare this one. It's pretty much identical. It is identical to CNCC because it's the TSX 60, but again, less covered calls here. But the yield is more or less the same, I believe, in this case. So that is for the leverage and non-leverage diversified, hold forever, good ones that you could, you could consider core positions in your portfolio. Now let's look at other more niche stuff and the closed-end funds and split funds. So of course you got BTCY and ETHY. That's been the major story pretty much in the last month. Of course, the US market's on fire, even the Canadian one, but Bitcoin and Ethereum has been absolutely exploding. It's completely on fire. And you see here the yield, because the price is rising so high, it's 8.65 on the Bitcoin and 8.33 on the Ethereum. So I have a strong suspicion, a strong guess that they will be raising the distributions anytime now for both of these ETFs. Moving on to split funds, Brompton has some of the best ones in my opinion here. Made a video recently about split fund Class A shares. There's still a lot of opportunity, guys, if you're into the split funds. Class A shares, my opinion on split fund Class A shares, I kind of am looking at them or feel they're more of a total return and growth investment over an income investment, but I'll probably do a video explaining my idea around this. But there's some great discounted ones. LCS and PWI are trading at small discounts. LBS is fairly close, small premium. It's you see here that the current price is $7.75. The net asset value is 7.26. But in my opinion, the ones that are really interesting, besides PWI and LCS, because they're trading at discounts, would definitely be GDV and DGS. So GDV, about 962, the net asset value is 943. It's trading at a very, very small premium, and I've seen GDV trade at 20-25% premium. So GDV, I feel, is also the best diversified one. Global dividend stocks, really, really good stuff. DGS is more of a, the best Canadian dividend stocks. This one also, now it's trading at a premium though, but very, very small premium. You see the net asset value, or it's worth 558. You pick some up at 570. Very, very nice yield. It's been paying, and now the unit NAV's about 1550, 1560. So, it's close to 15, but it's getting further and further as the overall Canadian market goes up, of course. For the middle field ones, they are both trading at 10% premium, over 10% premiums, RS and ENS. Just a reminder, guys, when you're looking at split funds, always make sure to calculate if there's a premium or a discount. My opinion, if it's 10% premium or more, I would say maybe wait, because you're basically paying 10% or more than it's actually worth. But anything less than 10% premium, that's a good time to maybe start looking, especially if you like the sector, right? Enbridge and real estate. You guys know that RS is my prime core real estate position. The QuadraVest ones, as I'm filming this on March 1st, unfortunately, the NAVs are not updated, so I'm not going to do any comparisons. But by the time this video comes out, for sure, it's going to be updated. So keep your eye on DFN and FTN, especially. They could be at a little discounts or at very, very, very small premiums. I would definitely keep your eye on those ones. So guys, in terms of what I feel is undervalued, it's always going to be harder to say when the market are on fire, right? We're shattering records. So obviously it's going to be hard, but it's really, I still think the most undervalued thing is, I would say, probably financials, Canadian financials. So there's a million of them. I like Bank, which is diversified. It has the 6 banks, 3 life insurance companies, and Power Corporation. There's BKCL, which is just the 6 banks. Those are my 2 favorite ones, but there's a million of them, right? There's even growth ones, leverage growth ones without covered calls, HFIN and HCAL. There's a million different options for Canadian banks, but I still feel like they're just waiting to pop, but they're kind of on hold until interest rates start getting cut. So I know the banks have recently released their quarters, and most of them have done well. I think just BMO missed their earnings, but the Canadian banks I'm never going to be worried about. So I think it's still the best time, or the most undervalued thing you could buy is the banks or financials in general. So you got Bank, you got BKCL, you even have FTN. Take a look at FTN as well. Utilities as well, and really gold has been suffering. So guys, remember, when stocks and equities do well, gold does not do well, and then the opposite is true when the opposite happens. So unfortunately, there is no leveraged covered call. There's no leverage version of GLCC. I know for sure I probably would have picked up some GLCL if that fund existed, but hey, over 13% yield on GLCC, not even leverage. Now's a great time to pick up some gold. So you have GLCC. You also have the new one, AMAX from Hamilton ETFs. And of course you have CGXF. And if you want just gold bullion, you have HGY, but the yield is about 6% on that one. So gold and financials is really what I feel is undervalued, but everything else is just on a rocket ship, especially technology stocks. They are definitely on a rocket ship. Another thing you should consider, I feel, maybe as a smaller position. Remember, it's already an HDIF. It's already a small position in HDIF here, HPYT, is this one. HPYT, long-term U.S. government bonds with covered calls, 15.5% yield. I recently picked up some of this because the deal is just too good, and this also should increase in value or go up when interest rates get cut. So what's really undervalued is the sectors or the things that are waiting for interest rates to get cut, and then they're going to go up. So things like utilities, the U.S. government bonds, and financials. So that's it for this video, guys. Hope you enjoyed it. Again, make sure you watch if you're Canadian, make sure to watch the American episode as well. That's where I'm going to look at, QQQY and QYLD, JEPI, JEPQ, all the American listed high yield funds, in case you're like me and you hold those in your RSP and Lira. Also, if you like this type of video where you get an overview, make sure you become a member for only $2.99 Canadian a month, guys, and you have access to the weekly opportunity report, which is kind of a condensed version of this, and I go over the split funds and I do all the premium and discount calculations for you. So I think just that report, which takes me about 20 minutes to do every week, is just worth the $3. So if you're interested, just click the little join button next to the subscribe button, or go in the video description below, and the first two links are about the membership program. So again, thanks for watching, and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades, and PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.